Everyone has to live somewhere, and everyone has to invest their money someplace. So what happens when where you live meets up with where your money is invested? Hello, real estate. Hey everybody, welcome back to Big Money Real Estate. I'm Elise Blink. Here's today's daily update. RealtyTrac's foreclosure numbers came out last week, and so I asked Daren Blomquist to come back on the show to help me break it down. He's the vice president at RealtyTrac and a frequent guest here on Big Money Real Estate. So let's talk foreclosures. Daren, welcome back.
Thanks for having me again.
All right, so what did the foreclosure numbers say this month?
Well, what they said is that while we are still on a downward trend, going back to normal levels of foreclosure activity, there was a spike in specifically bank repossessions, which is the final stage of foreclosure. We saw actually a pretty dramatic spike in bank repossessions, a 27-month high.
Wow.
They were up 50% year over year in the month of March specifically.
So you're seeing the numbers were about, what, 126,000 properties in April that went into foreclosure or that were taken back?
Yeah, the 126,000 nearly properties, that's all foreclosure activity.
Okay.
If we look at just the ones that were repossessed by banks in April, that was over 45,000, and that's the number really that was up. The 45,000 was up 50% from a year ago and up to a 27-month high. When we look at just foreclosure starts, those actually continued at around 50,000 new properties starting foreclosure, which is back to pre-crisis levels of foreclosure starts. So that's the good news. The bad news is we're still dealing with the cleanup in the form of these bank repossessions of the last housing crisis.
So the top 4 states on your study for these, Florida, Nevada, Maryland, and New Jersey. I think Maryland and New Jersey are judicial states. This doesn't include states like Illinois and New York, where do you think that you could see these numbers continue to be high, these bank repossessions, simply because the New York hasn't really kicked in, Illinois hasn't really kicked in, or do you feel like we've moved beyond that and it'll kind of stay where it is for a few months and then go?
No, I think we'll see, each state handles the foreclosure process, as you know, differently, and so I think we'll see these little mini waves of bank repossessions coming out, and the judicial states are most susceptible to that. So I won't be surprised to see some pops in the numbers in New York, places like New York and Illinois. And in fact, I mean, Illinois was number 6 in terms of foreclosure rate, and we did see a 46% increase in bank repossessions in Illinois specifically. It was just down a little bit further than some of those other markets, and New York also ranks relatively low, number 22 in terms of overall foreclosure rate, but if we center in on those bank repossessions, those are actually up 142% year over year.
Wow.
In New York. So we're definitely seeing this in the judicial states. Now, just to put those numbers in context, especially in New York, we're coming off extremely low numbers last year because of the very lengthy, protracted foreclosure process. We weren't seeing a lot of bank repossessions last year. Now, finally, that the logjam is loosening, that number's coming up, and that percentage increase looks pretty dramatic, although we're actually not, the foreclosure rate is not overwhelming in a place like New York.
So another telling number out of your pile of statistics that you got this month is the average sale price of an REO, real estate owned property that sold, was 87% of the average estimated market value of those same properties at the time of sale. The price point of these REOs are moving significantly higher. Places like San Diego, and San Diego is 100%. It's selling at full price. Charlotte is selling at full price. San Francisco, nearly full price. Bakersfield. It's real, Portland, Oregon. I mean, all these places where REOs were amazing values, it's not like they're great values anymore in those areas.
That's right. I mean, from the buyer's perspective, if you're going in some of these markets and looking for an REO or a bank-owned home, even with this surge in bank repossessions that we saw in April, unfortunately, you're not going to probably get a great discount in some of these markets because there is such low inventory of overall homes for sale that even these distressed properties are experiencing very high demand and competition from other buyers, and that's pushing up the price point that they're actually selling for.
Yeah, I mean, it's really good to see this kind of market suction happen for everybody who's got an existing home. And there are pockets where this is, seriously, looking at a state or a city, you really run the risk of kind of overemphasizing how something is doing, right? I mean, Atlanta is saying that properties, REOs are selling at 70% of what everything else is selling for. When you get into some of the outer boroughs of Atlanta, you are in a neighborhood where still there are a tremendous number of foreclosures and prices are very depressed there. And so that's balancing off with a place where it might be 100% of what's going on. So it's for anybody who's watching this, you want to keep in mind that it's so local, and we're talking about it on a regional or a citywide or a global level. It may not be the same in your neighborhood. You have to actually step on your front stoop and take a look around and see what's going on.
I think the takeaway is distressed properties, bank-owned properties can be great deals, but they're not guaranteed to be great deals, especially in this market where there's such competition. So you just, you have to really look at it as on an individual property by property basis if you're a buyer, and not assume just because it's a bank-owned property, it's a screaming deal.
When you look out, Daren, do you feel like we're at the end of the opportunity for investors?
Oh, no, certainly not. I don't think the end of the opportunity, but probably the end of kind of a very, very nice period for investors. And so we're coming to the end of this fairly unique opportunity for investors when home prices were still probably overcorrected on the downside and were coming up rapidly.
Yeah.
And so we're moving back into a normal market, which still presents opportunities for investors, but not maybe the scope of opportunity that we had seen during 2012, 2013, even into the first half of 2014. Those are really the golden years in recent memory for real estate investors, and we're moving out of that.
Yeah, I would argue that you've had anybody who hasn't been paying attention to what I've been saying since 2008. And now we're 2015. You've had like 6.5 years to make this work, guys. If you haven't done it now, the good times are over. You're going to have to work harder for it. Daren, thank you so much for this. Will you come back tomorrow? I'd like to talk about the new residential sales numbers that just came out this week and get your take on what you see happening there.
Sure, I'd love to do that. Thank you.
All right. We will talk to you again shortly. Daren Blomquist is the Vice President at RealtyTrac. Thanks for watching this episode of Big Money Real Estate. As always, you can send me your real estate investing questions on Twitter and Facebook. Be sure to share this video all around. And don't forget to check out my new series, The Intentional Investor, How to Be Wildly Successful in Real Estate. Even if you're not getting a great deal at an REO, you can still be successful. You can find it at the WitNation store or at thinklinkstore.com. See you tomorrow. I'm Elise Kling.